Good morning, and it's me, your host of the party, Kenny Polcari, and here is my morning market commentary, everything you need to know to get your day started. So what happened last week, what's happening this week, and what we need to focus on. So last week, as we saw, the week started off horrendous, but then it ended as if nothing had ever happened. Actually, markets making new highs, right? The Dow, the S&P, and NASDAQ marching higher and higher. The Russell and the Transport, though, they're not so sure. They're not marching in step with the other three. It's a big earnings week this week, and the Fed is on the docket too. They'll come out on Wednesday with their announcement. No change as expected. China causing global markets to come under pressure today. We'll talk about that in a little bit. Bitcoin surging as shorts run for cover when the market didn't break, as well as there's rumors about Amazon. We'll talk about that as well. Oil under pressure is something that demand is going to fade once again due to the latest outbreak of the COVID virus. I'm not so sure I agree. Expect volatility to reign supreme in the weeks ahead. So what are we having for dinner tonight? We're going to try the summer shrimp over a bed of orzo. So look, the Dow was up 238 points. The S&P was up 45 points. The NASDAQ up 153 points, all to close at records across the board, right? In fact, the S&P tested and kissed my year-end target of 4,400 after penetrating 4,300 only on July 1st, 3 weeks ago, right? The Russell and the Transports, while up, are still below their highs, suggesting that there are some out there that think something is amiss, right? Investors, analysts, strategists, and traders are all ignoring any of the warning signs that are pushing the broader market higher, right? Inflation concerns, breadth concerns, taxes, infrastructure, spending, even the coming debt ceiling, which happens this Friday, is doing little to stop the mania. Now, what started out as a potentially tough time for stocks last Monday ended up being a party by Friday, right? The new Delta variant, the COVID cases, sent the Dow tumbling as much as 900 points on Monday, dragging the others with it. But that was all a distant memory on Tuesday, Wednesday, Thursday, and even Friday, right? The focus immediately turned from the virus and all the potential issues that it was going to create to another week of expected explosive earnings, better macro data, questions about whether the Fed would move on tapering and eventually rates. And what the market seems to be telling us is that it does not believe the Fed is ready, right? I disagree with that, but that seems to be what the market's telling you. Energy was the worst performer on Friday, with the XLE falling about 0.4%. Not a disaster, but it did come under pressure. It was the only sector in the red. Communications, basic materials were up 2.5 and 2.2% respectively. Consumer staples up 1.2%. Even utilities rose by 1.3%. That's a defensive play. So that tells you something. The growth rate surging by 1.4%, while the value gained only 0.6%, leaving the growth rate up almost 20% year to date, while value's up 16% year to date. 10-year Treasury yields plummeted on Monday to 1.17 before ending the week at 1.23%. 30-year bonds plummeted to 1.78 before ending the week at 1.87. The VIX, which is the fear index, which shot up 34% on Monday when stocks were falling out of bed, lost 35% by Friday as stocks rose. And earnings, yes, they continue to impress, and they beat estimates on every line you can imagine. We're now running at about 88% of reported S&P earnings beating on every metric, and that's well ahead of the longer-term average of about 73. But this isn't a surprise either, right? Estimates have been for this blowout season have been widely discussed. We've been talking about it. The only unknown exactly was how big of a blowout it was going to be. Macro data for the week was mixed at best, right? Housing starts were much better, while building permits disappointed. Initial jobless claims and continuing claims were up, which is a negative. Existing home sales were down, negative. Kansas City Fed was up. Manufacturing PMI was up, more than expected, so that's okay. But services PMI was down, right? Disappointed. Down from the expectation. It's still well in expansionary territory, but down from the expectation. Inflation is still the wild card, with 50% of the country concerned that swiftly rising prices are going to hurt, and the other 50% appears to be completely at ease, and the clock is ticking. So it's a big week for earnings, right? It's also a big week for the Fed. Their July meeting is tomorrow, Tuesday, and Wednesday. There's a lot of speculation about what's going to happen behind the Iron Curtain. Are they going to announce the end of the craziness? Will the Fed stop supporting the overheated housing market by halting the purchase of $40 billion worth of mortgage-backed securities every month? Will they pare back the $80 billion that they're buying in treasuries every month? Are they going to hint at all of changing policy down the road? Surely they must at some point. Whether it's going to be this month or not, don't know. Over the weekend, I was on the Larry Kudlow show Saturday morning with not only Larry, but chief economist Joe Livornia from Natixis, and we discussed all of this. So you can click on the link. You can go to the Larry Kudlow radio show on Google it, and you'll see it. We're right there at the top with the second segment of Saturday's show. It was a great conversation, and we talked all about these issues that I just mentioned, right? Inflation, the Fed, Treasury, what's it telling us? What a bond yield's telling us, all that stuff. And this morning it looks like it's going to be another manic Monday, right? U.S. futures are down. The Dow losing 225 points. The S&P down 21. The NASDAQ down 20. The Russell's giving back 24 points. This all has China is causing angst in the global markets, right? I guess the COVID variant, which is causing even more angst last week, is just a non-event this morning, because that's even getting even worse since last week, but no one's paying attention to them. So several issues here are on the table. The first one is on Sunday. Yesterday, China again cracked down, like I said, on education and tech companies, right? Imposing all kinds of new regulations, right? Tencent, for one, is down 30%. They're forcing them to give up exclusive licensing rights, slapping it with fines for anti-competitive behavior and what is seen as an assault on domestic internet titans. On the education front, Chinese authorities are also imposing new regulations on the group, right? Banning companies from raising capital via the stock market and banning foreign money from investing in those companies. Shares in both those sectors are down, they got slammed overnight in Asia, falling 30% and 70% respectively. Hong Kong stocks ended the day down 4%. China stocks ended the day down 3.2% broadly, and that set the tone for Europe, which is lower, and also for U.S. futures, which are currently lower, right? Second, it's all about the geopolitical tensions that are building between D.C. and Beijing ahead of these high-level discussions that began over the weekend. China's foreign minister telling us that telling us that the U.S.-China relationships are now at a stalemate and faces serious difficulties. Isn't that a kick in the pants? Who would have thought our relationship with China could have gotten any worse? Wasn't Joey supposed to have this cozy relationship with Gigi? So I don't understand, and people don't necessarily understand what the issue is now. Third, it's a big week for earnings, right? More than 100 reports are due out, probably 150 reports, right? Apple, Google, Microsoft, Facebook, Amazon, Tesla, GE, JetBlue, Boston Scientific, UPS, Fiserv, Stanley Works, and more, all due out this week, and that's going to give us a real sense of what other industries, how they're doing, how they're performing, what the future outlook is, right? Fourth is the Fed meeting, and need I say more? The headline results are due Wednesday at 2 p.m. No change in rates is expected at all, but it's all going to be about the tapering. Fifth is the slew of macro data that's all right. Today's headline is going to include new home sales. They're supposed to be up 0.4%. Dallas Fed survey expected a read of 32.3. Wednesday is the Fed, and Thursday's second quarter GDP. Expectations as high as 8.5% for GDP growth in the second quarter, but that's the first release. Remember that. Sixth is just exhaustion in the markets. While making new highs, the markets are making new highs, but they're stretched, right? Breath is poor. Doesn't mean it can't go higher. It just means that maybe you shouldn't be chasing it at all right here. That's all. Just give it a chance to breathe, right? European markets are under pressure. Again, it's China, it's COVID, it's earnings, it's the supply chain constraints. And it's the unexpected weak German IFO survey. Just more of the same, right? Broadly, the markets there across Europe are down about 0.75%. Remember, the August-October period is a seasonally weak time for the markets, and a change in monetary policy is sure to exacerbate that mood, which is why I say be patient. You're not missing out. If you're invested, you're participating in either direction, right? And if you're not invested, what the hell are you waiting for? Give me a buzz. I'm always happy to assist you. Put a plan together, get started, talk about how you should get started, why you should get started, because at some point, everyone's got to start somewhere. So feel free to jump in. Oil this morning is down $1, right? This trading at $71.03 basically. There's concerns surrounding the possible reimposition of the mask mandate takes hold in some of the industry, telling us that demand for energy is going to wane again. Trendline supports at 69.50. But if the media continues to create all this hysteria, you could see it actually test last week's lows, which was as low as 65.60, which is intermediate trendline support. Bitcoin is rocketing higher. On Sunday, it traded up $7,000, just kissing 40,000 on a short covering rumors. And this morning, there's also word that Amazon is looking to hire. They placed a help wanted advertising looking for a digital currency and blockchain product lead, suggesting that Amazon is set to announce something big with Bitcoin, and so therefore causes the shorts to run for cover, right? Ethereum's up 8% at 23.80. The S&P closed at 4411 on Friday after trading in a 40-point range, 4381 to 4415. And as I said, I had a year on target of 4400 for the S&P. And right now it looks like I lost, but not so fast because we still have the August-October time period to get through, and so much can happen. Fauci telling us that everyone, vaccinated or not, most likely was going to be required to wear masks again as the virus spreads and the unvaccinated come under attack and put the country at risk. Remember, a faster than expected tapering, another spike in the various of the in different variants of the virus, all remain risk factors for the market, especially as we come into the fall, which is the seasonally weak time for the markets, right? Some analysts expecting as much as a 15% correction in the broad market. I don't think so. I'm happy with a 7 to 10% correction. It would be great by me. But so much is going to depend, as you know, on what Jay Powell says on Wednesday, what they say in August at the Jackson Hole boondoggle, and what happens with the virus, what happens with U.S.-China relations, blah, 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 all that stuff, right? You know what you can do? In order to get some information and talk to me, you can text the word INVEST to 21,000 on your phone. You'll download my digital business card. It's got all my contact information on it, my email, my phone number, my Twitter account. Whatever you need, you can get it. Reach out to me. I'm happy to talk to you about a plan, about putting a plan together, why you should have a plan, what's concerning you about the markets. You know, you can also get me on Twitter. It's just at my name, at Kenny Polcari is my Twitter handle. And if you're watching this, you know you can obviously get me on YouTube. Okay, so what are we having for dinner tonight? This is a great summer grilled shrimp dish, right? You put it over a bed of orzo with spinach and feta cheese. It's simple to make, and it's yet so good, right? So for this, you're gonna need 2 dozen large, cleaned and deveined shrimp, 10 or 12 skewers. You need olive oil, oregano, fresh lemon juice, minced garlic, salt and pepper, feta cheese, orzo, and then you need the spinach, right? You know what orzo is, right? It's a very small pasta used in a bunch of soups and salads and that kind of stuff, but we use it as the bed to create for the grilled shrimp. Now, if you're using wooden skewers, make sure that you soak them for a good 20 minutes before you put the shrimp on and put them on the grill, because then they'll burn and you don't want that. Now, you're going to pierce the shrimps onto the skewers. So you're going to, put 4 shrimps on the skewers, and then set them into a deep kind of Pyrex baking dish where you can just lay them out. Now you want to make the marinade, right? So you want the olive oil, the garlic, oregano, fresh lemon juice, salt and pepper, right? Mix it all together, put it in a shaker and shake it up, mix it all together. Pour half of that marinade over the shrimp that's in the Pyrex dish and let them marinate, right? You can cover it, let them marinate. If you're going to use them right away, just cover them, let them marinate. They can sit on the counter. If you're not going to use them till later, put them in the fridge. Now, we're going to bring a pot of salted water to a rolling boil. You're going to add the orzo. You're going to cook for 6 to 8 minutes. The orzo cooks quick, so you have to be careful. You don't want it to get mushy, right? Once it's done, you strain it. You're going to while it's hot, you're going to put the feta cheese in there. And you're going to put the spinach in there, right? Spinach and feta cheese. You're going to put the raw spinach in along with the feta cheese, and you're going to You're going to mix it in the warm pasta. The spinach will wilt, and the feta cheese will just get a little bit kind of melty. It's not going to melt the way American cheese melts, but it'll just get melty. Lay it out on a nice platter. And get ready. Make like a bed and get ready. Now you're going to take your shrimps. You're going to light the grill. You're going to make it really hot. You're going to clean it. You're going to take your shrimps and you're going to grill the shrimps. Now your shrimps grill very, very quickly on a hot grill. So maybe it's 2 or 3 minutes per side. Otherwise you're going to get tough if you cook them too much. But just once they turn pink, then you're going to get them. And you're going to then take them and you're going to lay the skewer out on the bed of orzo. And then you're going to present it, right? You can just present it put it on a dish and present it at your summer barbecue, just for dinner, whatever. It's a simple dish. It's a great dish. You don't really need anything else with it other than a glass of wine. And you know me, with fish, I'm going to drink a Pinot Grigio Santa Margherita, nice and chilled. And if you really like to, you can always have a rosé, but I wouldn't have red wine with that. In any case, listen, the bugs are out. I'm getting eaten alive here. It's early in the morning, but the sun is out. The tide is high. It's going to be another beautiful day. The markets might come under some pressure, but not to worry. Take good care. I will see you in the morning.